Good evening, everyone. It's Chris from Solstice ATR Axel. You can find us on the website, Instagram, Discord, as well as YouTube. We trade side market, up market, as well as down market using adaptive algorithm that's built by traders such as myself. And this is for educational use. Remember, check the website policy, and we're not a broker dealer. Smash the like button. Give us your commentary, share it with your friend. Let us know what you think about it and what you need in order to help you out. Let's go to the first slide. And what I did here on the first slide, I put the SPY, the Fortune 500 companies with all the sectors right here. At the same time, I put XLK, small cap IWM, since we rallied up the Nasdaq QQQ, the ETF, the VIX, where we had a spike up due to the volatility. And at the same time, the bottom corner, I put Apple, Amazon, Google, Meta, Microsoft, nvda, Netflix, as well as Tesla. The combination of those instruments coming back and retracing to the 116 SMA. And I will break this into detail for you. But the most important thing, looking at the SPY, the Fortune 500 from January low of 2024 till the April high and low, and the rally up till July, and we had this reset here. I want you to look at the structure in your trading. Understand where your 5 simple moving averages, your 18 and 50 in relationship to the long term and short term. There are going to be volatilities along the way and pullbacks at the same time, reversals and pulling back up. You have to be patient, look for setup, understand the long-term goals in relationship to the short-term goals. And when you are scalping, it's different than when you are looking for a swing trade. Allocation based on your account. Some of us trade more than one account. The short term is usually for day trading. The midterm is usually between a week, 2 week, 3 week, a month, 2 month out. And the long term usually is between 3 month all the way to a year, 2 year holding. Be flexible with your trading and be fluid. Don't be biased to one side. Take it day by day, week by week, and understand the overall setup. We can see that the SPY, which is the Fortune 500 companies with all the sectors, we looked below the 50 simple moving average, that's my 18, fell beneath it, and bounced off and filled 100% of this gap that was here. We still have this down gap down here. We had a reversal about 4.8% in the S&P 500, while the Nasdaq did about 10%. Let's go to the last slide. Remember, check us out on the web, get in contact with us, and let us know what we can do to help you out, or you can call the 949-414-8484. Let's go to the first slide that I have up here on the charts, and what I want to do, go one by one. Here I got Apple, Amazon, Google, Meta, Microsoft, Netflix, nvda, as well as Tesla. I left Tesla here by accident, so what we're going to do is add Tesla to this pile. Plus tsla. This was my mistake on my end. Here are the numbers. If I take the high for the daily on the chart from the high that we had here, all the way coming down to the 116 SMA, we had a 12.65% in the tech sector, which is the XLK and the Mega 8 in the Nasdaq 100 reversal. And we closed right up here on the Nasdaq positive inside the range, and we got a 10% decline from the highs to the lows. Is this going to be support for the combination of those instruments in the 116 and reversing back up, or do we end up retracing to the 38.50 and falling back down? Pay attention in case you create a cup or you fall through the 116 and you come back down to this area where the 200 SMA is to find consolidation, because I don't think this area here where we had consolidation when we fell and rallied up, we did that W shape where we're consolidating, looking for either a breakdown or break up, and eventually we broke up, retested that consolidation, this area, and rallied higher. Now we came back to this area here and retesting this area. Does this mean it's going to hold? If it does not hold this area, you're going to look for the downside. If it holds this area, you're going to look for the creating a shoulder before continuing in the same direction. Let's go to the next slide here. And what I have here, I have the VIX, the fear and greed gauge. And I put it from January of the year till right now in July. You can see when in April, when we fell down, we had a big spike in the VIX, then we fell back down in the $11, $12. And I had called this consolidation here to buy and protect and hedge your position in the VIX. On Friday, it sold off. We looked above on Thursday. We fell back in because the market was bought out on Friday on the S&P, which is the E-mini contract. In the futures, it was at at 54.42. They went to 35 and bounced off, and this was the reversal back in the S&P as well as the tech sector and the New York Composite, and the VIX sold off on Friday. Does this mean it's going to find support at the 38 or the 50 before this uptrend channel where we broke out of? Possibly, and reverse back up. Pay attention to the VIX. Let's go to the next slide. Here I have the QQQ, the Nasdaq 100. We can see the highs and lows. If I measure this high from here to this low down here, we had a 9.48% in the close. We closed around 8% in the Nasdaq decline from the highs of July. So pay attention if the 116 SMA holds. If it doesn't, we do have this gap down here. So let's go to the next slide. Here we have the Russell. We had called this consolidation here to go long in the Russell. We eventually broke the 210 area. We rallied higher. We got the second gap, rallied high, fell back into the 38.2 from the lows to the highs. You can see the 38.2 picked us up, rallied up, fell back in more than 2/3 of the move, and rallied back up on Friday. The Russell closed neutral to positive on the upside. Let's go to the next slide. Here I have the XLK, the Nasdaq 100, the tech sector. You see the tech sector in the spiders. This is a gap here. We have another gap here. We fill this gap up here. We still have this large gap down here. If the 116 does not hold and we rally back up, if it holds, we rally back up and look at the 38 or 50, fill this gap. If it doesn't, then we fall back in and we lose this 116. You're going to look for the backside of this large consolidation area here. If it does hold, if it doesn't hold, you look for the 200 SMA and this gap up here in the XLK to find an opportunity in the tech sector in XLK. Let's go to the next slide. I have put the E Micro Mini. I'm not going to use the E Mini because I have a lot of stuff on it between pivots, volume profile, control points, signal reversal. It looks like spaghetti. I want to keep it as simple as I can. We can see that this linear regression uptrend, we had draw it, we fell below it. We took that gap down, we filled 100%, then we eventually reversed back up. You can see that reversal on this candle. We tested it, bounced up. We tested the backside of this channel, couldn't hold the 5 SMA and fell back in. If this is going to be support or not, we have to pay attention what Monday offers. If it isn't, then if we fall, we look for the 116 and the consolidation of this area up here before continuing to the major backside of this channel. So let's take a look at the measured move in the S&P 500. We'll do it together. We're going to go to intraday. We're going to go 20 or 30 days. We can do it either way. We're going to use 6 hours so everybody can see it. We're going to push OK. And the overnight is going to be in gray between the European Asian market. And our open is usually from 9:30 till 5 p.m. in the afternoon. And that is the black area. If I look at the Sunday high, this is the Sunday high. This is the Thursday low. So I'm going to go get a measuring tool or Fibonacci. I'll show you how to do it either way. If I draw it this way, that's the extensions to the bottom and top. And you can see the 161 on the top and at the same time the bottom. But what I want to do, instead of using this, I'm going to use a measured move to understand the level. This is my measured move. I'm going to go from the bottom, top to the low. We can see where that low is. Edit the property. And what I want to do is extend it. You can see -1, which is -100, +2 is 200. And instead of using the 21st, which is the Sunday low, I'm going to extend it all the way to 5. So everyone can see that I'm going back in history, and this is the gap I left in the charts where that gap was. We filled 100% of it. We no longer have this gap on the charts, but I left it there as visual for everyone to see. So we can see that the extensions, the 100 down to 0, where my 50% is. If this is going to be continuation, we're going to clear the 38, 50, and 61. We're going to come back, retest the breakdown. If this doesn't, and we go up, look at the backside of this channel, and we fall back in, we're going to look for the backside of the 25, this consolidation, the 50, and eventually the 80%. So I am not biased to either side. We're going to trade what we see on the charts, and that's the most important thing in trading. Let's take a look at, for example, I want to show an example. VDA, we had called it on June 19th for the dump nvda, and I'm going to show you one more in the tech sector. I did this drawing here, and I said we're going to go lower. We could double top like an M pattern. Eventually we got an I here, an I here. Then we looked to retest the breakdown of this candle, couldn't make it, and we fell further down. We consolidated. If the technicals cannot take out this channel and the 38.2, we're going to look further on the daily chart. We're going to go to the daily, and I'm going to show you how it looks like. So everybody, this is the cone, and I did the atmospheric pressure lesson by gravity, and I kept it that way. And we took the 261% fib extension on a cone, and I said this is the reversal, and this is where we fell down. We looked up, we created a crab. This is an eye, this is an eye. This is, and the arm, is it going to push back up or is it going to fall back in? And we have to pay attention to this big consolidation in this gap. We had filled this partial gap here. You can see it. We filled this gap, but we still have this one down here. If I zoom in, this is my gap that has filled, no longer valid. I can take it off, remove it. And you can see when I tested this candle, we tested this consolidation right here and bounced back up. But if I cannot clear the 38.2 fib and the backside of this channel and the 50, it does this and fall back in. We're going to look for the 116, 100% of this gap, and eventually this consolidation if you look at NVDA. Here is CI. I'm not going to talk about Google in the other one. I'm just kind of giving you an idea. I had done this in the prior week's video, and I said be careful of this chart. If it doesn't come back up to the backside of this channel, you're going to look for the 50 and eventually the 200 SMA. Where did it stop? Let's zoom in. We stopped right above the 200 SMA in this consolidation and reversed back up. If this cannot continue and clear this area here at the 758 and 778, there's going to be a little bit more pressure underneath the 200 SMA. And if I remove those two cones that I did, remove the drawing, I'm going to show it to everybody. The machine did the auto channels for me automatically from the control or signal alerts, reversal crab pattern. This is like an M. This is a gap, fell through down further. Let's go back to the Nasdaq micro NQ or the Q. Oops, sorry. NQ. We can see that the Nasdaq, I do have these pivots. I left them on. These are virgin control points, but I did not put the ones at the low. And I had these ovals here to show them to you whenever we tested this gap. But if I zoom in here on the Nasdaq, we had this gap. We retested. We fell in. We still have this consolidation here. If this is going to hold the 116 or fall further all the way to the 100 and the backside of this channel, if it reverses and clears the 38.2, the value area low of the prior days, which I did not remove, and I did not create a VPOC here, which I did not put on the charts because this is a runaway downtrend. We missed this gap. There's another virgin control point. We have still now 4 VPOCs at the top. You can ask me what they are in order to help you out. I hope this video was helpful. If you have any questions, once again, check us out at the website. Get in contact with us. Give us your smash. Take care.